so you can see how I just made $3,000. I feel like that's the best way to show people or teach people how to trade these markets is to show them how I'm doing it, right? Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're going to do things a little bit differently. I'm going to be showing you all a Zoom call recording from some of our private material. Now, in the evenings, what I've been doing for the CYPRX students is going over my personal fundamental and technical analysis ahead of the trading session that I'm looking to trade for the next day, giving the students insights to what it is that I'm seeing in the market and what it is that I'm looking to trade before the move plays out or before fundamental factors come into fruition in the Forex markets. Now, the reason why I'm showing you all this information is not to brag or boast. We are going to be going over a trade analysis where I made over $3,000 in one trade. It's not to flaunt or brag about how much money I make. It's to show you all the information and the value that we provide in the CYPRX community. And hopefully with this video breakdown, you take something away from it. So take out your notes, especially if you're a beginner or novice trader looking to trade, or you do not have a profitable trading strategy yet, and write down some of the things that I go over in this trade breakdown. Now, if you're interested in joining our private community, we'd love to have you on the team. Vast amounts of information and knowledge, and you will have direct access to one-on-one mentoring with myself, all of our Zoom call meetings, all of our course material, and our private CYPRX Discord. Now, before we get started, another reason why I'm showing you all this video clip is because the students inside the CYPRX community in the evenings when I'm going over these Zoom calls are for a fact learning. Here is a message from one of the private CYPRX community members where he goes on to say, the more that I watch the Zoom meetings and your explanations are so well explained, I feel like I'm learning fundamentals slowly, but I pick up something every single video. So with that being said, make sure that you all are taking notes. Again, I'm showing you all this inside information from within our CYPRX private community to display the vast amount of value and information that we give to our CYPRX members. Let's jump into today's video breakdown. So I'm going to run through this quick, okay? Overall, this is just, I've been attempting to try and show you guys transparency. I hope that the transparency that I'm showing you all is giving you faith in your mentor and hopefully your own ability to learn this information and trade with the trend, even if the market's in a temporary pullback phase, or even if you're in, a situation where you get caught off guard and you enter too early, or you trade against the trend, to be able to flip your position and your analysis based off of everything that I've been trying to show you guys. So real quick, I'm going to ask two questions. If you've been paying attention to the CYPRX El Chapo analysis section, specifically focusing on GBP JPY tonight during Asia's session, what, aside from the Japanese data release today that we had been projecting in the chat and that I went over, what have we been focused on between the two central banks, predominantly trading in the direction of those two central banks' divergence? You don't have to answer out loud, just in the back of your head. To save time for this video breakdown, what have we been talking about? We have been talking about how the Bank of Japan has maintained an ultra loose monetary policy stance, and the Bank of England has had a more tight monetary policy stance, or a hawkish tone, considering the fact that their inflation is still somewhat high relative or comparatively to the United States, whose inflation has declined over the past several months. So we've been playing that divergence. And on the higher time frame, we've also been playing the overall bias that GBP JPY is going to maintain that bullish narrative as long as that divergence between two central banks maintains and stays on par. Now, we can't sit here and we can't predict how deep these retracements are going to be on specific trading pairs, or how long the banking institutions are going to be selling for. But given the higher time frame perspective in the Bank of England and the Bank of Japan divergence, we've been playing these buys and this narrative that price is going to continue to drive higher as long as that holds the most weight. And today we saw some of that take place. And I've been telling you guys to pay attention to that. So just as always, I like to show proof. I don't like to be the type of person that's like, oh, I did this and did that without showing you guys. So in the analysis, in the weekly recap, we talked about in the case of GBP/JPY and focusing our attention, drawing divergence in the central bank policies between the Bank of England and the Bank of Japan. The Bank of England has maintained a hawkish stance, citing inflation persisting around 4%, which is double the central bank's target of 2%. This data suggests the Bank of England has a significant task ahead to control inflation, albeit we know what's set to be released this week, UK inflation data. So we are going to be paying attention to that because that is set to come out with a slight decrease, which if it does, in my personal opinion, is most likely, again, it's not guaranteed, it's most likely going to weigh on the Great British pound because that's going to signal to the market that during the next meeting of the Bank of England, they're not going to have to take such an aggressive stance on taming inflation, especially if that inflation is coming down. On the other hand, the Bank of Japan's Consumer Price Index, or CPI, for Japan came in lower than anticipated, and this was last week, signaling that inflation in Japan is not stable enough to warrant a shift in their monetary policy stance, bearing minor corrections or bullish bias on, or excuse me, our bullish bias on GBP/JPY for higher time frame remains intact. So I let you guys know that this was my overall perspective, which is why, again, if you're learning, it's important to read these fundamental breakdowns that I'm giving you all, because if any of this stuff changes, what can you do as a trader? You can start to shift that sentiment. Oh, the Bank of Japan came out more hawkish. Well, Cyprus told me what's been holding the most support or the most weight on buys on GBP/JPY. The fact that the Bank of Japan has been dovish. So if they come out with a more hawkish tone and they mention potentially tweaking their monetary policy or exiting their ultra loose policy stance, what is that most likely going to result in? Yen strength, GBP/JPY weakness, right? You can use these things to your advantage once you start really tapping in. So following that, I mentioned to you guys what we were looking at to pay attention to on Monday. Japan PPI is anticipated to decrease both year over year and month over month, indicating that inflation is still distant from reaching the Bank of Japan's targets. This could potentially weigh on the yen, reflecting the challenges in achieving the desired inflation level. So this is what I was telling you guys to be paying attention to. Fast forward to today, okay? We can see here, just going over to some articles that came out today, where it talks about Japan's wholesale inflation flat in December, eases pressure on the Bank of Japan. And we can see here as well, data released from the Statistics Bureau of Japan showed on Tuesday that the nation's producer price index, or PPI, grew 0.3% month over month in December from 0.2% in November, beating the estimation of 0% on an annual basis. Now, the PPI figure remained flat in December from the previous rating of 0.3% rise above the market consensus of 0.3% fall. I know that that's a lot to interpret, but now let's go down to this part. This is the chunk that you want to consume. The Bank of Japan Governor Kazuo Ueda has stressed the need to maintain the ultra-loose monetary policy as he awaits further data that might show if inflation will persist. So that one sentence right there tells you off the bat what type of positions you should be looking for, even if the market brings volatility and temporary strength to the yen, right? Even if, like we saw today during the Asian session, a slight pullback in the GBP/JPY pair, I've mentioned to you guys that those pullbacks to push price down into discount are expected. We know that banking institutions don't like to buy at highs or at a premium. They like to buy at a discount. So any discounted pullback price needs to be seen as a buying opportunity. Here, this sentence, given this fundamental breakdown, confirms everything that I've been attempting to teach you guys or to tell you guys to trade in tandem with. Again, I want to rephrase that. I'm not trying to teach you all or tell you all, technically speaking, how or what you should be doing in the market. I'm trying to show you guys what I'm doing in the market so you can see how I just made $3,000. I feel like that's the best way to show people or teach people how to trade these markets, is to show them how I'm doing it, right? So step by step, remember I talked to you guys in previous tracking videos. The first thing you want to do is layer fundamentals, because fundamentals are what create volatility. Volatility in the market creates opportunity for us as traders. So when these news events come out, You have to exit that retail mindset that these news events are bad for you to trade. No, you need to have the mindset that you need to learn and understand how to trade them, which is what I try to teach you guys here at CYPRX. Okay. So he also further stated that the central bank will scrap the negative rate when it becomes sufficiently certain of achieving sustainable inflation of 2%. So, with that being said, during the beginning of the session today, does anybody know why we had strength and an increase in the Japanese yen? It was due to the demand that we saw at the beginning of Asia's session for safe haven assets, right? So if you can see here, we saw the dollar gain strength on renewed safe haven demand. Remember, overall, you're trading the Great British Pound, which is a risk-on currency, up against a risk-off currency, i.e. the yen. So at the beginning of this Asia session, we saw some strength for safe haven assets. Once the fundamental factor came out and Governor Ueda spoke, which was here in this area, significantly enough, it's when price was coming down into the bottom of a delta. That's when this release came out. The Bank of Japan Governor Koiza Ueda stressed the need to maintain ultra-loose monetary policy. And GBP JPY shot up in one candlestick over 25 pips, right? So that was your solidification if you did not catch this move, what direction temporarily you should be trading with. And I say temporarily because why? We're high frequency intraday scalpers. So you're looking to take these positions, get in and out of the market, and capitalize on market volatility. Well, if you know that Governor Ueda just confirmed and stressed the need to maintain an ultra-loose monetary policy, and we know that that has been the driver for demand in the Great British Pound up against the Japanese yen, or the specific trading pair, excuse me, then that would be the direction for scalp positions that you'd be looking to take. Sure enough, given the screenshots that I sent you guys ahead of time, looking at this one in particular, if you zoom in, looking at the entry areas I sent you guys, was for price to come down into the bottom of this delta, for us to respect and push price above the 185.135 psychological level. I sent you guys this analysis ahead of the curve at 3:16 p.m., so almost an hour before the event came out when Governor Ueda made that announcement. And sure enough, we had that move come into fruition almost to the T. Albeit the risk to reward profile that I sent you guys, where I'm looking for price to come back up into the 186, has not come into fruition. But we still did see a significant increase in the form of pips from that specific psychological level that I gave you guys in advance. Now, I did not catch this full position. I did enter a second position. I'll go over the technical analysis in just 1 second. This was my $3,000 trade right here. And then I'm scaling out of a position. As a matter of fact, I'm probably going to close and take some profit while we're on this call right now. I'll go over these two trades in the form of technical analysis in just 1 second. Did anybody look at the charts today during Asia session and get thrown off guard when we saw this strength temporarily in the yen at the beginning of the session and think that GBP JPY was going to sell off? If you did, speak now. Is anybody confused as to why we've been calling out buy positions predominantly, or to be taking or focusing on buy positions predominantly on this specific trading pair? So just as everything goes to show, remember layering. First thing you want to accomplish is understanding fundamental understanding of the macro environment, right? Why are these central banks moving price the way that they're moving it? Then dial that down to intraday price swings and intraday movements. What causes those types of fluctuations? These speeches from these Bank of Japan or Bank of England speakers, right? Then dumb that down to technical analysis. You have the deltas along with the CYPRX strategy. So that's what we'll get into next. So if we zoom out, we'll just start from the hourly and we'll go down. Why I was looking at buy positions, plain and simple, just right off the top of my head. I was simply looking for the banks during this Asia session to buy at a discount from where they bought from the previous session, in a nutshell. Okay. So we'll get into the technical aspect of that general concept. You can see here, remember what I teach you guys in the 2.0 content. Having my session indicators on, I know I changed my chart colors up, but it's honestly to save my eyes from the blue light. So we're looking to trade this Asia session. So that means, what do you need to do? You need to go back to at least 2 prior Asia sessions to gather what the market did. If we go back to this Asia session here, and for the sake of the time of this video breakdown, we're just going to go back one Asia session. You can see where the banking institutions during Asia were buying from, not only in the form of deltas, but also in the form of structure. On the hourly time frame, we can see that during the beginning of this Asia session, there was an impulsive move at the beginning of the session. Price pulled back, created a higher low. Significantly enough, it was at the bottom of a delta, the 184.750 psychological level, and price expanded. During the middle of Asia session, price had a slight retracement, pulled back, respected again the bottom of the delta, and then went and flipped bullish again before passing price action over to London. So as we headed into this Asia trading session, all I was simply saying to myself was, can we see Asia session pull back down into a discounted area from either this area? Let me turn my EMAs off. Sorry, I know it gets a little confusing. Can we see price action pull back down into a discount from where this Asia session bought from here, or where they bought from at the beginning of their session down here? Those were pretty much the only things on the higher time frame that I was looking at. So can we get a discounted pullback via higher time frame areas of interest? Okay. So on the hourly, these were the two areas of interest, highlighting from candlestick bodies down to the wick and extending that over, I was looking at. However, I have access to the delta zones. So what was I doing? I was only looking and dumbing that down to the area where this higher low is created underneath of the delta zones. So my two areas of interest before heading into this Asia session looked like this. We know that banking institutions like to dig deep down into the bottom of the deltas to manipulate price and then buy up whatever asset or trading pair you're trading, right? Excuse me. So that was my higher time frame analysis. Now, significantly enough, at the beginning of Asia session, we also had an increase in demand for safe haven assets. So that solidified my mentality and my perspective that yes, the banks are going to use this catalyst most likely to drive price down into a discount. And I, as a trader, know the macro environment still holds the most weight. So that gives me an opportunity to sit patiently on my hands and wait for price to come down into a discount. Once it does, scale down to the lower time frame and look for a reversal pattern or look for a CYPRX confluence to understand that the market makers are about to shift price. Okay. So at the beginning of the session, just playing price over again, you can see where price action was at. We were here. As soon as Asia session opened, again, this is the hourly time frame. You can see that price dropped straight down to the area of interest that I had highlighted from the previous Asia session, where the banks bought from, facilitating their second order in the market to drive price higher before they pass price over to London session. Once price came down into that area of interest, I was on the hourly chart. I then said to myself, now I can scale down to the lower time frame. You don't want to be watching price action on the lower time frame because what are you going to most likely do? You're going to get manipulated. You're going to start to trade against the higher time frame, and you're going to start to second guess your bias. Okay, remember my bias going into this trading session was everything that I gave you so far in the form of fundamentals and technicals, which was a bullish bias scenario. Okay, you don't want to, if you have a pre-planned analysis, you don't want to trade against that until everything that goes against that pre-planned analysis comes into fruition, if that makes sense. So what would I have needed to do to reverse my bias and start selling? I would have needed to see a hawkish Bank of Japan. I would have needed to see inflation back above their 2% target. I would have needed to see a further increase in demand for safe haven assets persist throughout the entirety of the session, right? All of those factors would have needed to come into fruition along with the technical analysis plays, which would have been a break in previous bullish market structure, which remember, this area right here was that hourly higher low that I identified, highlighting from the low or the high to the low and extending that over, would have needed to be broken bearishly with a retest underneath to give me confirms. Only once I had those things would I be looking for sells, right? Only when I had those things. However, we did not get any of those things. So why on earth would you be allowing this fractal bearish price action that we saw at the beginning of Asia session to manipulate you to think that price is going to randomly just wake up and reverse? It makes no sense. You get what I'm saying? This is why I try to teach you guys to trade with the trend. Don't jump in the river and try and swim against it. Learn patience. Learn how to identify when's a good time to deploy capital, engage in the market with your overall bias, which I've shown you guys from my perspective was bullish. So once price came down into that delta zone, I scaled down to the 5-minute. What I wanted to see from the 5-minute was I wanted to see price fail to break this previous structure area on the higher time frame at least twice and create some type of, in my personal opinion, signal that the market's done liquidating lows. And that for me comes in the form of two things. One of two things: a violation of a low, an engulfing candlestick that previously engulfs any bearish price action. That's one. The second thing would be a higher low that comes in after this type of pattern that signals that the market is more interested in liquidating highs instead of lows, which is the CYPRX pattern that I try to teach you guys that institutions need to make before moving price higher. It's a shift from weak hands to smart hands, or from sellers temporarily controlling the market to buyers saying to themselves at time of them being in their trading desks or wherever the heck they're at moving price, that now is a discounted price for us to start facilitating capital into the market. And this is the pattern they must make. They're testing the strength of sellers, fading them out, buyers coming back in, overpowering them, and then they're facilitating more orders into the market because they cannot just put one in. They have to do multiple. If they put one order in the market, this market would freaking look chaotic. It would look crazy. Okay. So we got this pattern to the absolute T of a degree. Let's scale down now to the 1-minute chart. You can see here for the very first time, okay, I want somebody using their annotation tool in this general area to show me where the pattern is for the first time in this area that I just showed you guys. If you can, use your annotation tool. Okay, Bobby, kinda. Happened a little bit before that, but not bad. Beautiful, Bobby, right? Great. So Bobby just identified it for you guys. So for the first time, after the market, given the higher time frame, dropped into discount, remember this orange area right here, okay? This was our higher time frame discount. So that's confluence number one. Confluence number two, if you have the deltas, is price coming into the bottom of the deltas. Confluence number three is we have this massive bearish candlestick, right? Then following that massive bearish candlestick, we have a lower high. However, following that lower high, we do not create a new low in the market for the first time. So you see here, this low is higher than this one. So this shows you that now sellers are not in control of this price action. If they were, they would have created a new low in the market. All of those factors, including the macro perspective that I've been giving you guys, is signaling that this could be a potential reversal area. We're also, keep in mind, at a discounted area from where Asia session bought from the previous day. And sure enough, after the higher low comes in, we get that solidification that buyers are in control now. They overpower sellers by creating a new high in the market. This is now a higher low, higher high formation. You now have your new trading range. That means from this low to this high, anytime that price comes down into this discounted area, you have to see that as a buying opportunity, but also understand, what do the market makers like to do? They like to build liquidity. So you can assume that early buyers guessed the bottom here and got in and have stop losses underneath of these lows, i.e. liquidity trapped in the market. So now what are the market makers doing? They're trapping buyers and they're trapping sellers. We know that in order for them to shift market structure, they have to scoop that trapped liquidity out of the market. So we're not going to buy price action quite yet. We wait. And so I did. Signaling right over here, I was waiting for the market makers to scoop out that trap buy liquidity in the market and then shift structure. So all I was waiting for was a drop in price beneath these lows. We got that. Once this bearish candlestick dropped beneath these lows, I started to ask myself, where can I place? And remember, we're on the 1 minute chart. So you have plenty of time to do this stuff when you in the live market. I'm telling you guys right now, if you think you don't, you do. Each of these candlesticks is a minute. So once this minute candlestick started to form and break beneath these lows, I started asking myself, where in this area here can I place buy stops above where the market would logically need to break in order for me to see that buyers are back in control? For me, that was this third bearish candlestick here. Because if buyers can break back above the area where sellers broke down this previous market structure low and create a higher low, higher high formation, that would solidify for me that this was the manipulation event to clear out all of these trap buyers underneath these lows. Where are they going to be targeting next? All the trap sellers above highs. There's your risk to reward ratio. Boom. Buy stops engaged. Let me get rid of all these drawings. The market shifts. We see a nice bullish move and push away from a major psychological level. And then this is exactly when Governor Ueda made that announcement. That just solidified the position that the Bank of Japan is going to maintain its ultra-loose monetary policy stance, at least for now. That drove demand back for the Great British Pound, less of a demand for the Japanese yen, and solidified the bullish move in the reversal for the majority of Asia session. Okay, it's not to say what's going to happen during London. Remember, we have to take these sessions session by session, because what's coming out during London session tonight or tomorrow morning for you if you're in London or UK? Unemployment claims, right? So as of right now, we saw a bullish reversal on GBP JPY that pretty much came and cleared out any sellers that were selling prematurely to the Asia session here. So we had trap sellers in the market here, trap sellers in the market here. Those positions have now been liquidated. Now what's set to come out? Unemployment claims. So looking into London session, I'll just give you guys a little bit of a technical analysis play. So I hope that you all took something valuable away from that specific video breakdown. That is just one of the many Zoom call recordings in our private CYPRX course material that you all have direct access to if you choose to access our mentorship program. With that being said, if you enjoyed this video, smash that thumbs up button and subscribe. We appreciate the love and the support. Don't forget, the link to our mentorship program is in the description down below. You all can always reach out to the customer support email to schedule a one-on-one face video Zoom call with myself to ask any questions that you might have before enrolling in our program. I'd love to show you via a screen share everything that you'll have access to via our Discord and the course content before you make a decision about joining our team. Many blessings to you guys. As always, be cognizant, be aware, always trying to provide value and information to you all. With that being said, I will see you all in the next video breakdown.